Welcome back to the channel, everyone, and thanks for joining me. In case you're new here, my name is Kyle and I'm the founder of D3 Finance. Here at D3, we provide fractional CFO services to small businesses who are looking to improve their profitability, take back control of their cash flow, and optimize their tax positions. We specialize in services for software as a service businesses and waste management businesses. In a previous video, I demonstrate a common work product that I put together for many of my CFO clients. This particular work product helps clients organize their P&L and extract meaningful information from them. In today's video, we're going to be adding statistical information to these profit and loss statements and demonstrating the incredible value that having statistical information on your P&L can really have. In my opinion, this is an absolute game changer in terms of your ability to understand your business and make meaningful and confident decisions about it. At the end of this video, I'm going to be walking us through a case study of a pricing calculator that I put together for a client of mine that dramatically improved his profitability. The point here is that this pricing calculator was only made possible because of the combination of financial and statistical information that we had gathered and organized for this client. In our previous case study, we used an example of a SaaS business. In this particular case study, we're going to be using a waste management business. Sometimes SaaS businesses have far too many metrics within them, and I think waste management businesses make this example of the use of statistical information a lot more simple and a lot more easy to see. In this case, the business operates as a non-hazardous liquid waste transporter, where vacuum tanker trucks dispatch out of a staging yard, service customers, dispose of their contents at the local landfill, perform a washout, and then either return to the staging yard or go to other customers for service. On the administrative side, this founder actually maintains the books himself with the assistance of a billing and administrative clerk. They initially engaged me in order to understand how they could improve their profitability, but they also wanted the pricing calculator that we're going to be walking through so that they could understand how their pricing should change as the cost of labor and materials in the economy continue to change. As with all of my case studies, I have obfuscated the numbers for my client's anonymity, and I've also simplified the operations a bit in order to help my points land a little bit easier with the audience. With that said, please sit back and enjoy. Welcome back, everyone. In case you're not already familiar with how I organize client P&Ls from my previous content, I am going to walk through that process a little bit here in the initial step of this case study, and then we'll get into the statistics, and then we'll get into the pricing model. Upon my initial review of this QuickBooks output that I had received from my client, I noticed a handful of small problems. First, I think we have driver salaries or pay in a handful of different locations on this P&L. So we've got some up at the top there and then a little bit down here. Next, I could see that our cost of goods sold number was not exactly correct in that we were missing some pretty critical components, here being the insurance and the depreciation. And then lastly, the driver total payroll here is not necessarily correct because we have some staff that are being included in these costs. But ultimately, the point I want to make here is that as much as small businesses do a good job of keeping their books to this degree, it's not particularly meaningful because we need to have these costs categorized in a meaningful way in order to derive some kind of value and decision-making basis from it. So in order to do that, in order to organize these P&Ls correctly, what I do is first thing I'll do is insert a row where we're going to eventually put our function or cost categories. So you'll see here I've got a handful of different cost of goods sold categories, and then I've got a handful of different G&A categories as well, and then I've got a couple of different revenue categories. And you'll notice here all I've done is inserted a row, and I've used a data validation to select from this selection box. Basically is how I have this set up for myself. And in order to do this, I do have to work with clients because I need to make sure that I understand exactly where these different line items go within these groupings. So I did sit with the owner and their billing assistant to walk through this because they were familiar with how the books are put together. And that's how we were able to categorize all of these different costs and their revenues. Once this is done, we then are able to get to this output right here, which is really kind of like the work product that I wanted to show you. Okay, Now that we have our dashboard organized, I do want to walk through a handful of different points of value that this product brings to small business owners. This is a little bit of a recap from my previous video, but because it was a SaaS business in that particular case study, I want to walk through these points of value one more time briefly for all of our waste management owners out there. So you'll notice that the true value of this work product is that we actually have meaningful cost categories. Oftentimes, business owners don't necessarily fully see or understand what they're actually spending on particular cost categories. Oftentimes, we feel that we're spending a certain number, right? But the first value point of this product is that we can truly see what we're spending in each of these categories on a month-to-month basis. Next, this is very valuable for trend analysis, where we can understand how our business might scale over rising and falling revenues. Also, we can determine what the composition of our cost truly is within our business. We can see here that the largest portion of our costs are coming from disposal and labor, for example. Not every single waste business is like this. Some I've seen where the disposal cost is in the 30-40% range, and the labor really isn't like the biggest consideration when it comes to their cost of goods sold. In this particular case though, these are fairly evenly weighted, and then the remaining cost actually is a pretty good proportion, 31% here, coming from everything else, including repair and maintenance, depreciation, and all these other cost categories. Next, you can see that I've got a forecasting column here. Oftentimes owners will ask me about a particular profitability that they'd like to reach, or maybe even like a particular gross margin that they'd like to reach. This forecasting column helps to you can kind of play around with the numbers to see what your P&L would need to look like in order to hit some of the goals that owners ask me about. The next valuable component within this work product is going to be your gross margin. When it comes to putting together a marketing strategy and a marketing budget, understanding customer acquisition costs is important. But what's even more important is understanding that customer acquisition cost in the context of customer lifetime value. And your gross margin percentage is a key metric when calculating customer lifetime value. Scrolling down here a bit, we then enter our general and administrative cost categories. Very similar points of value here, except they just relate to the general and administrative costs instead of the cost of goods sold categories. You can see here again, we have nice proportions that we can use to analyze our business, and we can forecast certain savings we might want to have or additional spend that we might think is necessary for the business. And then finally, we reach a net income number here that's obviously very meaningful for understanding how profitable your business is. If we really needed to get to it, we also have an EBIT and an EBITDA line here as well, if those are the metrics that you'd like to look at. All right, we finally made it to our statistics section. I did want to pause here to give an incredibly important word of advice to my owners out there. When it comes to gathering data and making the investment in gathering data, quality is king. If you're already a business that is capturing statistics for yourself, do not capture more than 5 statistics and do not use more than 5 statistics in your P&L analysis. If you're a business that doesn't really gather their information right now or has trouble with some of their statistical information at the end of each month, I would suggest taking the next 6 months, nailing down your process for gathering 3 of the most important points of information you can about your business, and then adding from there. Here are just a couple of different examples of statistics that I see a lot of waste management businesses capture. You can see here that we've got driver labor hours, number of jobs, tonnage, mileage, number of loads, which is somewhat similar to number of jobs, and then also fuel efficiency. When it comes to selecting the statistics that you want to capture for your business, in my opinion, there is no more important statistic for a business than the fundamental drivers of your cost fulfillment. In this case, because disposal costs are the highest proportion cost of goods sold category, we're going to be focusing on the number of loads that the business is disposing of every single period as its primary statistic. Now that we've established that loads is one of the business's primary statistics that we should try to analyze it with, I want to show you how having this statistic unlocks 3 additional points of value within this product that are extremely valuable. So this table here that I've put together is an efficiency table. I'm effectively dividing all of our cost of goods sold cost categories by their respective month load metrics. Just to make sure we're clear here, if we scroll up, you can see how the efficiency of our fuel cost changes month to month. You see that, right? We're going from one month we're at 125, another month we're at 120. What's driving this? In this particular case, you can see that it's because in this month, in June here, we did 156 loads, but in February we only had 131, or here in January we only had 124. So as our costs change and our ability to service customers and increase the number of loads we have every single month, this table will help you really get visibility into how efficient your costs are. Beyond the efficiency of your cost of goods sold here, which I believe is just the total cost of goods sold divided by loads, you'll notice that I don't have a particular breakout for the G&A categories. I find that this level of visibility into cost of goods sold is fairly useful. You're actually going to see why that is on the pricing calculator in just a moment. And then the only level of visibility you need into G&A that I think is very important is doing an all-in cost, G&A cost divided by the number of loads. This is extremely important, and when I put this table together initially, I could start seeing into the business pretty well. So one thing I want you to notice here is that, and I haven't really talked about this yet in the case study, but the way that the pricing model for this business works is that they charge $1,200 per load for their customers, okay? And so we can see pretty clearly here, let me get our net income back. Okay, so if I have an all-in cost of goods sold and G&A for a particular month, and my pricing is $1,200 a ton, guess what? Every single month that has an all-in cost above $1,200 is going to have a corresponding negative net income number. Right? It would have to, right? Mathematically, that has to be true. You can see it here in July. The tonnage goes down. That pushes the cost of the G&A and cost of goods sold, but predominantly G&A up into like a little bit, like slightly above $400. And immediately you can see that means we're gonna have a negative net income this month. And so you can start to really pull a lot of value from this table in terms of understanding what pricing needs to be at what scale, what happens to your business's bottom line at different scales, all kinds of things like that. And then finally, to move into the pricing model, I've tried to keep this pricing model fairly simple. This is what it looks like here. Having our table here is going to help us tremendously when it comes to our assumptions in our pricing calculator. Again, I've kept this exceedingly simple, but I just want to show you the back and forth that you can, again, this is a tool that you're using, right? A downstream tool of this original work product. So here, like I said before, we're going to have a $1,200 per ton charge to our customers. So total, again, kept it simple, total charges is $1,200. Let's assume for a moment that our round trip mileage is 30 miles, and that there's a buffer of a couple miles for maneuvering to get the load from the customer site and then maneuvering at the disposal site as well. So I come up with a rough estimate of mileage of 62 miles. Let's say we have $4 fuel price, a 5.75 fuel efficiency, which again, if you have actual data in your table over here, you can really see what you're getting from a fuel efficiency standpoint. That comes to, and then basically what you take here is you take the mileage times the fuel price per gallon and divide by the efficiency to get your cost for this particular trip. And then for labor, you want to use a fully burdened labor cost here times the estimated number of hours times the number of personnel to get to a rough estimate of total labor for this job. I've lined up my cost of goods sold categories to align with our dashboard. And you'll see here, we know we have a direct known cost of $200 per load at the landfill. We calculated these estimates for fuel and labor. And then this is again where that dashboard really comes into play, is R&M, repair and maintenance, depreciation. You could use a mileage for depreciation if you wanted to. I didn't do that here. And then these other costs, you don't know what the R&M spent. No one job, not all of your jobs are going to have R&M spend. You're going to repair a truck one time this month, and that truck is going to do 100 jobs, right? So you have to have some way of effectively estimating or allocating the cost of these different line items that are indirect to these jobs, so you can calculate a profitability basically, okay? And then the kicker here is that you don't have to break out your G&A. I think it's simple enough to do it this way, where you have one G&A hurdle that you have to get over. And again, this is going to be coming from, so I just took this number right here, 367 right here, which I think is our average. Yeah, okay, so it's effectively our average total G&A divided by the total loads over the last 4 months. And I'm using it here as, okay, once we get to gross margin of roughly $500, what's the G&A hurdle we have to get over in order to get to a net income number? And so just using these simple mechanisms here, you can get to a very good conclusion about, number one, what are the true mechanisms of cost that go into your jobs? And then also, as those change and as your scale changes, what can your pricing model actually look like? In this particular case, we wanted to understand as labor, fuel prices, even disposal costs go up, what's my pricing need to do to maintain a particular percentage of profitability maybe? Whatever you're looking to target, in my opinion, this kind of tool, it's exactly what you need. But the basis for it, and kind of the point of this whole video that I hope is coming across well, is that having these statistics here and being able to build efficiency tables like this, and just metric tables generally speaking, add a ton of value. And you don't have to calculate every metric in the world. You have to calculate, what I try to really give to owners is that you want to capture the right data and calculate the right metrics, and then you don't get lost in the weeds and you make the important decisions about the important things, and you don't spend too much time on the less important things. Thanks for joining me today, everyone. I hope you found this case study valuable in better understanding why it's so important to organize your P&L's financial information and capture good, high-quality statistical information and integrate it into your month-end reviews when you're looking at your P&L and trying to improve your profitability. Please let me know if you have any questions and leave any comments you would like to in the comment section below. Please drop me a like if you can. Again, my name is Kyle. I'm the founder of D3 Finance, and I'll see you on the next one.